All right, you guys able to hear, especially those in the room and then those on Facebook as well. All right, just a quick check if you can hear. Either give a reaction in terms of liking this or just type a yes in the comment section, so that everything is checked, and then I'll start today's analysis itself. Okay, cool. Right, so I'll start off this week sharing with you what is in the events calendar first. Okay, so this one is a routine. That means every week before we start trading, we need to actually check what we have in terms of risk event, some of the economic indicators that is coming up for this particular week, so that you are aware what's going to be moving the market. Okay, and you won't get surprised, when certain things move. So the first thing is you check out, right, in terms of Forex Factory for this particular week, what is in line. Okay, so today, even though it's not stated here, it's actually the US holiday. So you will expect the market to be pretty quiet for this US session. Okay, usually on Monday it's already very quiet, but if it's a holiday, it will be even quieter. All right, so having said that, you might want to consider not taking any new trades on the US session because one is price might not move much, right? And the other thing is liquidity might be low. Right, then you want to take a look is to next day, right? Tuesday, what we have monetary policy meeting from RBA. This wouldn't be significantly important, but you still need to take note of it, because if there's any changes, a major change in the report itself, then it'll move the market. But if there's nothing much that changed, right, as compared to what was released 2 weeks ago, then the market wouldn't move much. So you can just expect nothing significant. Then after that, on Tuesday evening, we have a lot of PMIs coming from the Eurozone. Right, these PMIs are considered tier 2 data, right? It's not very important, but you cannot ignore them as well. So if you look at the forecast, most of them are expected to come in above 50. Right, so above 50 is actually positive, means it's better than it's improving. Right, so this gives you a quick idea into whether the chance of ECB gonna taper by the end of this year. All right, so if all this data comes in positive, fundamentally is gonna support the ECB in stopping their QE soon, and then they'll go into tapering. Right, later part on the same day, we have UK inflation report hearings, and then at the early morning on Wednesday or late night on Tuesday, we have GDT price index from New Zealand. Okay, all these are not very significant, but keep an eye on it. Similarly, on Wednesday, nothing much that's going to be happening. Okay, you see this red color news, that's RBA governor speaking. It's actually not very significant news, simply because they are just in a leadership forum talking about some outlook. Right, unless Governor Louis said something drastic, don't expect this to be a market moving. So what I mean is it's not going to be a catalyst to move your market. Okay, then if you look into it, nothing much. Again, you have UK second GDP estimate for GDP, right? Expected to come in the same. This is not going to be very significant data, simply because this is the second GDP that's going to be released, right? You can see here it's also called the revised GDP, right? So the impact on the market is not going to be significant for this, all right? The only one that is going to be crucial on Wednesday will be your core retail sales from Canada. Okay, expected to increase drastically from previous 0.1. They expect to come in at 0.8. Thursday is an important one, all right? We have the FOMC meeting minutes coming in at 3 a.m. This will be crucial for the dollar. Okay, the things that you want to look out for is whether the rate hike is coming in on March, or whether the 3 potential rate hike in 2017 is still on the table, right? If there is a change in that sentiment, you can see the sell-off, selling pressure coming in the dollar itself. Okay, I'll talk more on the dollar because this week focus, if you look at the calendar, though, is pretty quiet. The focus will still be on dollar, all right, similar to last week. Right, and then later part of the day, nothing much. Again, if you want to focus on the key one, it will be on your Canadian, all right, CPI and core CPI. So CPI, again, Canadian is expected to come in better than previous. Right, so of course, if it beats the estimate, you can see Canadian dollar strengthening as well. Okay, but if you look at this, overall, it's pretty relatively quiet as compared to last week. Okay, the focus, if you want to pick up the one catalyst and the one key currencies to focus on for this particular week will be your dollar for the FOMC meeting minutes. Right, I'll bring you to the chart to share with you more on terms of the outlook that we have for this particular week. Okay, giving you a broader perspective on the daily time frame, you realize that nothing much has moved since last week, right? Because you look at this as a daily time frame last week, and today when we are sharing is just a 5 candle difference, right? What you will see is there's a pin over here, right? Which occurred last week. Okay, so our analysis on the dollar is still long-term bullish. Okay, fundamentally nothing has changed. It's still bullish in terms of if we see 3 rate hike from now, the fundamental data from US is still positive, right? All points to still a bullish bias on the dollar, right? This is more towards a longer term perspective, especially on the daily time frame. Okay, but we do not expect the dollar to go up from here. All right, we expect one more move lower first to complete this entire correction, right? You can see this is a one move down. We expect 2 and 3. Okay, so where is gonna be completed this correction? Where we expect it to complete? We expect it to complete between the area of 98.4 to 99.7, right? High chance is gonna complete somewhere around the 98.4 area. You can see there's a very nice confluence of 50% as well as a trend line over here. Okay, so the bias is going to be we are going to continue to hold a bullish bias on the dollar until this level over here, which I put in validation level at 95.97. Until that level is breached, we're going to hold a bullish bias on the dollar, right? But having said that, doesn't mean that we're going to buy it now. Just that long-term wise, we expect the dollar to strengthen, right? So for traders who are trading more higher time frame, longer term perspective, you might still want to continue look for opportunity to buy the dollar. Right, but of course, if you are those that are trading on a smaller time frame, you might want to be cautious, right? Because if you buy here, it can still fall before it rise again. So I'm going to share a view on H4 perspective. Okay, H4 perspective, last week we saw this, all right, an up move, and then we say that once it tagged the 101.5, it's going to reverse, right? It did tag that area. The highest point it hit was 101.76, right? And then we see a very significant selling pressure coming from the dollar, right? So what is our bias for this particular week on the H4 time frame perspective? It's slightly bearish. Okay, as long as price remains below this structure high that was formed last week at 101.76, we'll continue remaining our bearish bias on the dollar. Okay, how far it can go? We're gonna expect a 1-to-1 move from here. Right, from this high to this drop. Right now, what we are seeing is actually a correction. Right, we expect at least it's gonna tag around the 99.6. Right, and of course even lower if it wants to go there, right? But the minimum target and minimum expectation we can expect the dollar to drop further is up to 99.6. Okay, so if I put in my arrow, okay, we are expecting something like this, right? To come down towards 99.6 area. Okay, so if you are looking for short opportunity, we don't trade the H4 directly, right? So H4 is more like a medium-term perspective, giving us whether the H4 time frame confluence with the daily perspective. If it yes, we go down to hourly to look for shorting opportunities, right? So in terms of hourly, we are seeing some shorting opportunities. Area in which we can look for a short is actually somewhere between 101 to 101.24. Right, very similar. We are still seeing a bearish bias on the dollar on the H1. You can see this up move completed, right? Because it has a 3-wave move, 1, 2, 3, a WXY. You have a trend line. Price actually broke below it as well. Right now, it's actually in a correction. Okay, so this correction, I don't believe it has completed. Okay, let me do a quick check. Okay, it might have completed, right? This correction here, it might have completed at 100.96, all right, somewhere around 101. It might have completed this correction. So it might start to fall already. Okay, but what we are going to do is we're not going to short the dollar index here, because our expectation is we are going to look for short opportunity up there at 101.09 to 101.24. Okay, so if price does another push higher, all right, you're gonna fall into the zone in which we're gonna look for shorting opportunities. Right, so if you are shorting the dollar index, this is what I'm going to do. Right, I'm going to look for opportunity to short it at 101. My stops I'm going to put somewhere above the 101.24. All right, and my target I'm going to go as low as just now I mentioned, about 99.8. All right, so this trade simply can give you easily 3.4 risk to reward. All right, a pretty decent one. Even if you decide to short it right now over here, right, your stop size to go above that 618 retracement. If your target is about 99.8, right, it's still a risk to reward of slightly 1.5. Not too bad. Okay, but of course, if you're able to short it right on the top, it'll be better. Okay, so this week bias again is on selling the dollar. Right, so if you're trading the dollar index directly, the area to look out for is at 101.09 to 101.24. Right, but having said that, highly likely price can start dropping already. Okay, going on to the gold, right? I'm going to share with you the 3 commodities market as well. Daily perspective of gold, still more upside. All right, we are gonna remain bullish bias on gold on a daily time frame until price tag the level of 1276. Okay, minimally is high chance is gonna tag that level at 1276. So if you have any long trade on gold, you can still hold on to it. Right, just shift your stop loss and protect that trade accordingly. Right, as long as price doesn't breach this low of 1180, right, we are going to continue to remain bullish. Okay, this is on daily perspective, so you can see there's still more upside potential on gold. If I drop to 4-hour, very similar analysis, right? We have this 1, 2 is currently forming the third wave up, all right? So it gonna form your ABC, and you have a trend line over here as well. Okay, so currently it has a structure low here. As long as on H4, okay, price don't break below this low, high chance it's gonna continue going higher already. Okay, this is in confluence with the bearish bias on dollar, because when dollar is bearish, right, your commodities on gold will rally as well. Okay, very similar outlook on this. Okay, so if we go down to H4 and look for buy opportunity, I don't see any right now. In terms of the strategy that how we're going to trade this, but if you are those that trade the breakout, right, you might have this. You can wait for this to break up, right, and then you can look for a long opportunity. Okay, you can wait for this consolidation. Once it's done, right, it's going to break out. You can look for a long opportunity from that break. Okay, we don't do that, so you need a strategy of yours to decide how you want to engage that trade. Okay, what I'm going to expect is on an hourly time frame, it's going to go something like this, right? Let me zoom out a little bit. Okay, this is the final target that we have, all right, at 1276, which we identified on the daily and the 4-hour. Okay, but we expect price to do something like this. Okay, it's going to move higher on a 1-hour time frame, tag the 1256. We're going to see some resistance, a correction. From there, then we might see another push higher. Right, so this correction can come deep to tag this trend line, or it can be shallow, right, somewhere in between. We never know as of now. Okay, but I'm expecting to see a 3-wave move like this. All right, so it's not going to be straight up. All right, so if you're a short-term time frame trader, if you manage to take a long trade here, you might want to take some profit off at the 1256. Okay, take some profit off that trade, protect it. All right, because that correction might be deep. Right, and you want to at least get some profits out of that particular trade, and then when it comes back again, it'll be better chance for you to take another long trade. Okay, so this is for gold. Silver is actually presenting something very similar. Okay, on a daily time frame perspective, in terms of upside potential on silver, right now, it's not a lot of room. Right, you can see over here. I'll hide this arrow. You can see over here, there's not a lot of room for it to go higher as compared to gold. All right, gold has more potential for it to move. But in terms of silver, there's not much. The price level that we expect it to tag and then turn is around 18.35, all right, or 18.33 that you can see over here. Right now it's trading around 17.98 already. So the room for it to go higher is limited. All right, so we are, because of that, Okay, we are going to hold a bearish bias, and we are going to look for a potential reversal instead of a trend continuation setup. Okay, on a 4-hour time frame, we are seeing this, right? So we are having a reversal bias because the upside potential is very limited. We instead look for a potential trade to take a counter trend one. Right, so we are still expecting it to go higher, right? Tag the 18.35 to around 18.38, right? It can go as high as 18.7. Right, once it enter this zone, very high chance we're gonna see a reversal, right? Whether this reversal is gonna be a huge one all the way to a downside, or is it gonna be a big correction? Doesn't really matter, because what we are expecting is if it reverses, we're gonna take a short trade, right? And we want to be part of it, right? What we are seeing over here, we also have a bearish divergence forming here, right? Just show you my oscillator. This is a standard MACD, right? You see price is moving higher, but your MACD is actually moving lower. Okay, it's forming lower high, here is forming higher high. So this is a bearish divergence. It's showing you that the momentum towards the upside is actually pretty limited. So it's showing you signs that there's a high chance price is going to reverse soon. Okay, H1 time frame, the trading time frame itself, very similar. It's a reversal bias on the silver. Okay, our trade plan is to look for short opportunity between this zone that I highlighted just now on daily and H4 time frame as well. Okay, this pattern here that you see that I draw two lines, all right, covering here, this is what we call in terms of wave, all right, is actually ending diagonal formation. All right, ending diagonal usually come in a wedge pattern like you see like this, all right, and you usually have 5 internal move inside it, right? So you have 1, 2, 3, 4, 5, all right? So we still expect one more move to the upside to complete this 5-wave diagonal before the move down, right? So this 5th wave up, all right, it can end around here, all right, means it's gonna fall short of our expectation, or it can be a last push up, right? Tag this level, form a pin, and then it comes down. So to understand, this pattern, that you can expect one more move to the upside, right? So right now it's not a good idea to take a short trade. Wait for that one move, push up, all right, and then look for that short opportunity only then. Right, so gold is slightly bullish. Silver, we are looking for reversal. Okay, now let's go over to the major pairs. All right, the first one is euro dollar. Okay, I'll show you on the daily perspective what we are seeing on euro dollar. All right, overall it's still in a downtrend. All right, no doubt about that. It's forming lower low and lower high. Right, but right now, even though it's a downtrend, it's not the right time to take short opportunity aggressively, simply because we expect one more move higher. This WXY. Okay, this 3-wave down has been completed. So once this kind of sequence has been done, right, this 3-wave sequence is done, we're going to expect a deeper correction. All right, so we don't expect this correction here to be completed. We expect 1, 2, 3. Okay, one more move to the upside to complete the entire WXY structure. Then only we're going to see more downside like this. Okay, and what you see over here, you have a confluence of not only your technical trend line, you also have a confluence of your 50% Fibonacci retracement plus a 1-to-1. Area is going to be interesting to watch if you are looking to short the euro dollar. Look out for this area, okay? Because once it's comes to this area, it's a very decent opportunity for you to take a short trade. Right, so in terms of right now at this current moment, we are seeing some room that we can trade the euro dollar to the upside. Right, so on H4, we're going to see if we're going to spot that similar opportunity or that similar room for it to go higher. Okay, so for H4, you can see I wrote here we are holding a neutral bias. Okay, the reason why we are holding a neutral bias is because I'm going to explain to you in terms of structure. All right, over here we see 5-wave up. Okay, if you're sharp enough, you realize that this 5-wave here, if I draw in this trend line, you realize that it's actually very similar, all right, to the 5-wave structure that I drew and show you on silver. Okay, this is a diagonal. All right, so a diagonal structure can be either a leading one or an ending one. So in this case, it seems like it's a leading diagonal. Okay, because it starts from the very bottom, it leads into the trend. So it's generally called a leading diagonal. You can see 5-wave as well. 1, 2, 3, 4, 5. right? So this leading diagonal has been completed and you see this correction down, right? So this is a deep correction down. Right now is inching higher, all right? But as long as price have not break this level here, which is 50% fit retracement to 61.8 fit retracement. In terms of price, it's at 1.0675 to 1.071. As long as price haven't break this area, we're gonna hold a neutral bias because price can still do this. Okay, price can still do this. But if price breaks above it, meaning it does like this instead, okay, it breaks above this area, we can expect it to go all the way up already. Okay, so right now we are neutral because we do not have sufficient information to know whether it's going to go higher right now or it's going to go lower. Okay, so in terms of euro dollar, we are holding a neutral bias. Okay, but keep watch of this level highlighted here as well as this low here. Okay, I'm going to show you on 1 hour time frame. Very similar to 1 hour, 4 hour time frame, right? We are holding a neutral bias. Okay, again, because right now price is trapped between two areas. Okay, if it's gonna break above this, we can gonna see more upside. If it's gonna break below, we're gonna see a downside move already. So my best advice, or I would say recommendation, in how do you want to handle the euro dollar is not to trade it, right? But if you are aggressive, okay, we wrote here, look for buy opportunities between this retracement area. This trade plan here is coming from the buyers of a weak dollar, right? So we are actually bearish on dollar index, and we expect because of the weakness on dollar to push the euro dollar up. Okay, that might happen or might not happen because you still need to look out for the euro strength. Okay, which we have some data coming in next week. Sorry, not next week. Next trading session on Tuesday. Right, we have a lot of euro data coming in. It might be the catalyst, right, to push your euro dollar higher. Okay, so for euro dollar, for this week is to be cautious. But if you're aggressive, you can look for buy opportunities stated over here. Next major would be the pound. Right, pound itself overall we are still bearish, right? But we are not looking to short right now. Okay, very high chance you're gonna see price move one more time higher to tag the 1.2850. This is almost 80 to 90% of the time is gonna go like this. All right, once we see this formation, almost 80% of the time is gonna move one more time up, tag that 1.2855, and then it's gonna come down from there. Right, so as of now, my suggestion to you guys is not to trade this. Okay, just keep an eye on this. H4, right? Why I say it's gonna go up because of this formation here. Okay, you're gonna see this structure here, ABC. This is a flat, right? And then you see this again. This is an expanding diagonal. Once this structure completes, okay, you can expect the upside momentum going. All right, so that's why I say right now is not the right time to short it. But instead, if you're aggressive, you can look for buy opportunity. Right, on H4 time frame, we are slightly bullish bias. Okay, as long as it remains above this structure low that's established here, right, which is your price level of 1.2347. Okay, this is interesting because it adds in confluence with your weakness in dollar. Okay, so if it's gonna play out, okay, we can see this coming in this particular week itself. I show you on a H1. Okay, you can see today it starts to move higher already. But today, because the US market is closed, it's gonna be pretty quiet. So you can wait for a correction. Okay, it might still do something like this. It might still come down first, tag this low again before it goes higher. Right, so look out for that. Okay, so this is for pound. Okay. For Aussie dollar, all right, daily time frame, very clear cut. What you are seeing here is a triangle pattern. All right, so this triangle pattern hasn't been completed. We expect one more move to the downside, your E wave, before it's gonna go all the way up. Okay, so right now is suggestion to you guys is look for that short opportunity instead of looking for long. Okay, as long as price remains below 7778, we are bearish on this. Okay, I'll show you on H4 what I mean. Okay, daily we're seeing that triangle, all right, reversal bias. On H4, we are also holding that same bias, reversal. Okay, we also have a bearish divergence. Let me show you what I meant. This top and this top, right, the recent top is higher than the previous one, but you look at your oscillator here, right, your high is actually a lower high. So this kind of divergence, again, is showing you that there's a potential reversal. Right, and we have a trend line here. So once this trend line breaks and price break below this structural low of 7617, it's gonna gain momentum, and you're gonna see it drop very fast. All right, so something similar like this that you see in this C wave, all right, B123, something similar can happen over here as well. All right, like this. If I map it out, something like this can happen, right? So 1, 2, 3, all right. If it goes, it's gonna go very fast, all right, and it's gonna be very difficult to catch it. So what you can do is, if you're aggressive, all right, on H1, okay, you can look for breakout strategy to enter a trade. Okay, right now there's no setup, but if you are looking for breakout, all right, you need to have a proper strategy. So this one you see over here is a trend. It's a trend line. So if price breaks below this, all right, you can look for short opportunity, and of course a break below this structure level here at 7617 is going to confirm more downside potential. Okay, so for our strat, there's no setup that we can share with you, but in terms of direction, high chance is going to go lower. So if you have your own strategy to trade it, you can engage this trade itself. Okay, Kiwi is another one that you can look out for. Okay, daily perspective, we are bullish bias, all right. You can see overall it's still an uptrend, right? You have a higher high, high low. It's not ready to go up yet as of now, okay, because this up move is very strong. It needs to come down. It needs to have a deeper correction. So this correction, we are expecting it to complete around 7058 to 7118. Okay, you haven't tagged that, so wait for that. H4 time frame, right? We are seeing this. Okay, if you follow us 2 weeks ago, you saw this, right? We said that it's going to turn, and this was when RBNZ released the rate statement, and then that's where Kiwi sell off, right? Right now, we are still expecting one more down move, but not right now, right? I'll show you on H1 what I mean. Okay, H1, when you see this kind of pattern again, okay, quick one is you see this up move very strong. It comes down very slow, and it takes very long to come down. This is a corrective pattern. So once this correction is done, all right, you're gonna expect one more move to the upside first, which high chance is gonna tag around the 7255 to 7283. All right, once it reach there, it's a very decent opportunity to take a short trade. Okay, so wait for that move to go up. Don't short it right now. Okay, how you can place your position, right? If you're aggressive, you put it at 50%. Right, your stops needs to go above a 618. Your target can go below here. Right, conservative one, you can put it at 7120. This gives you a risk to reward of 1:2.5. Very decent already. All right, let me do a quick check and in fit to see which one is a higher chance of it tagging. Okay, very high chance if it's gonna go up from here. All right, look for the 618 instead of the 50. All right, because high probability is gonna tag the 618 first and turn, right, instead of the 50. So it will go all the way to 61.8, and then you will see the reversal after that. Okay, so if you are looking for short opportunity instead of the 50%, look for the 618. Your stops can be somewhere above it. Your target is similar here. All right, it increase your risk to reward by a significant amount. Okay, so this is a pretty decent one to keep a lookout for this. Okay, you have events coming in that's gonna move your Kiwi, right? Which we have just now went through. All right, you have your GDT price index on Tuesday night. If it's gonna come in positive, right over here, your GDT price index last data was 1.3. So if it's coming better than 1.3 on Tuesday, it can be the catalyst to move your New Zealand dollar higher. Okay, so once it goes up towards this area, look for that short. All right. So dollar franc. Okay, dollar franc is slightly different from euro. You can see that euro is in a trend, right? But dollar franc is actually more in terms of a range environment. Like right now, daily time frame we are bullish. Okay, expect price to tag this low before it's going to go up. So not a good opportunity to look for buy right now. Instead, because we are holding a bearish bias on dollar this week, you might be interesting to look for short instead of buy first. Okay, H4 we do not have a setup, right? But you can see that price actually break this previous structure trend line, all right? So we are expecting more downside, but very similar to euro dollar is look out for this key level, 50 to 6.8, right? This key level needs to be broken before you can open up more downside potential. So as long as price remains above this, the chance of it going lower might not be there, right? H1, oops. Okay, H1, again, not a very good setup as of now, but if you're aggressive, you can look for short opportunity here, right? I shared with you this on euro dollar as well. The reason is because price is actually trapped in between these two zones. Okay, as long as it's below this 1.0060, the chance of it going lower is still there, right? But it needs to break this low. Okay, so as long as price ranges between here, it's very difficult to decide where it wants to go. But you can take cue from the dollar index, which is this week we are bearish on it. So the higher probability trade is actually look for short. Okay, so here I put you can look for short opportunity between these areas, but we won't be taking it personally. The reason is, again, I shared with you already, right? It's not clear. It's not a very high probability trade. It's just slightly above, I would say slightly above maybe 50 to 60% of the chance of it dropping. So we'll be skipping this trade, but if you're aggressive, you want to hop onto it, right? You can still look for that decent opportunity. Okay, dollar Canadian is interesting. All right, dollar Canadian, we shared this on the trade of the year, right? We said if you haven't watched that video, all right, the trade of the year video is actually on YouTube. Okay, you can go and look out for it. We shared at the beginning of the year some of the trades, a very good trade, risk to reward trade that you can take out and look out for in this year. So one of the pair is actually dollar Canadian. We shared that there's a very high chance it's gonna go all the way lower. Okay, I'm going to show you what I mean. You see this move here is very significant. All right, we are going to expect that once the correction is done, this move, okay, we expect that this entire correction, once it's completed, we're going to see this. Okay, we're going to see something similar like this coming. Okay, at the start of the year, all right, we mentioned that this move might have been started. Okay, because what we saw was this has potentially completed a three-wave corrective structure, and expect this to move down like this. All right, but instead of that, what price did was it continued to move correctively. So right now what we're expecting is after this correction has been done, we're going to expect to see one more move to the upside before this is going to come. Okay, so when price develop, you need to update the analysis as well. So right now, instead of aggressive looking for short, right, we are actually holding a bullish bias on dollar Canadian. Okay, but again, when we hold bullish bias doesn't mean you want to buy right now. You want to wait for better opportunity to look for buy setup. Okay, so for H4 time frame, you can see this. If you are very sharp, again, you can see this pattern forming. Okay, we have shared this in the previous two pairs as well, silver and euro dollar. Right, it's again a diagonal structure. You can see 5 wave in it. All right, 1, 2, 3, 4. Now it's forming the 5th wave down. Okay, looking at this, all right, it's 50-50, right? Simply because we need more information from there. But there's a 50% chance it's gonna come down, tag this and then go, or it can break this structure and start going already. Okay, so no matter what is gonna happen, look for that buy opportunity. Okay, you can either buy it at a break over here, or you can buy it at the bottom. Right, so you need your strategy to engage this kind of setup. Okay, so look out for this. So we are holding a reversal bias, all right? So it has been moving lower, but we are holding a reversal bias because we expect price to bounce once it tagged this low at around 1.2890 to 1.27750. Okay, I bring you to a 1 hour time frame. Okay, 1 hour time frame, we are holding a slightly bearish perspective. Right, the reason is because we saw this move down 1, 2, 3, which is your WXY. All right, this 3 move has been completed. All right now this 1, 2, 3, right, over here it's what we call an expanding flat. Okay, so this is a corrective structure. This is a down move. This is a corrective structure. So once the corrective structure is completed, we're going to expect another down move similar like this to happen. Okay, so this corrective structure, the expected area to complete is actually around 1.3127 to 1.3165. Okay, so once price comes towards this area, we're going to look for an aggressive short around here. Okay, again, aggressive is simply because it means that if you are a very conservative trader, this setup is probably not for you, all right? But again, you need your own strategy to engage this, right? We're gonna look for some short opportunity around this area when price tag this. Okay, so if it's gonna tag and go, it's gonna probably form a pin and then it's gonna go. Okay, how far it can go very similar is at the 618, which is your 1.2891. Okay, if you're interested to take this trade, you can look for short, all right, somewhere around the 1618. Your stop loss above the upside confirmation, because if price really breaks this upside, our bias is going to go up already, all right? It's going to be bullish from there. So as long as price doesn't break this, there's a chance it's going to go lower. So even if you take this, okay, your stop above this, you target here, your risk to reward is 1:4. Okay, very decent kind of risk to reward trade, right? So we're going to be actively looking for this trade going into this week. Okay, last one to share with you in this video is the dollar yen. On a daily time frame, no doubt about it, we are actually bullish, right? In fact, almost all yen pairs, we are having a bullish bias on a higher time frame. Right, the reason is because yen is still in QE mode. All right, your BOJ is still in QE mode. It's gonna be weakening. All right, your Japanese yen is gonna be weakening. All right, but again, not the right time to buy dollar yen, because if you zoom into lower time frame, all right, we can expect two things. One is that it's gonna go from here. The second scenario is can tag lower first, right, between the 111.35 to 109.1 before it's gonna go higher. Okay, the reason why we are not going to be aggressive looking for long on the dollar yen is because our bias on the dollar index for this particular week is bearish. So if you take a buy on dollar yen, it's actually counter trend, it's countering our bias on the dollar yen, on the dollar index, right? So we wouldn't want to go against that. Okay, so I'm actually waiting for more confirmation in terms of dollar yen trade. But if you look at this, it's more or less showing us the sign that it's going to go up, right? So very high probability your dollar yen is going to go higher, right? But there's a slight chance that it can break this formation, break this structure, and still go lower. Okay, and if it's going to go lower from here, it's because your weakness of the dollar, and if it's going to go higher, it's probably going to be because of weakness of the yen. Okay, so in terms of trading opportunity wise, dollar yen might not be the best and clearest trade that you want to watch out for, because if you are looking for trade ideas, recap, right, this week, look out for Kiwi, right, very decent trade ideas. If you're aggressive, look at dollar cat. Okay, you have some ideas here as well. Look at gold, right? Some ideas on gold, right? But gold, I wouldn't say it would be very. It's not something that can straight away take action on for this week. Silver is one, okay, because this move up here, okay, it's not huge, right? Even though on the chart it looks like a very wide gap. But if it's gonna move, you can see, right? It just needs 1, 2, 3 candle to print out 1, 2, 3 candle. Show that to you on the chart. You just need something like this. You just need one trading session to reach there. Okay, so even though the room, the gap looks huge, the movement itself can be fast. All right, so keep a lookout on silver, and of course, if you want to look for opportunity, pound dollar is another one. Okay, look for buy when it tags this low around here. Okay, so quick recap what we went through this week. All right, our bias is bearish on dollar. Okay, look out for opportunity on silver. All right, look out opportunity on pound, on Kiwi, as well as your dollar Canadian. Right, so I went through all the majors for this week market analysis. Any questions from the room as well as those on Facebook? What? Me? Not yet. They went in already. Okay, so for those who are no questions, right? Okay, so no questions. We'll end this week market analysis over here. All right. Again, we always repeat. If you have any questions after that, feel free to still drop your questions in the comment section, and then we'll reply accordingly. Okay. So those on FB, I'll see you guys next week. For those who are in the room, I'll quickly walk you through a little bit more, all right, in terms of the report, so that to tackle some of the questions that you guys have. Okay, so we have a question in the room. All right, one of you actually asked about why there's a disparity between. Let me just zoom out a little bit. Okay, there's a question that asks, right, why there's a disparity between this data and the COT data, right? To answer that question, you need to understand a little bit in terms of what is this fundamental data and what is the COT data, right? So fundamental data that you see over here is actually all based on economic data, right? It takes into account purely your economic number, right? So if your economic indicator is positive, all right, it's going to add on to a positive data. If it's negative, it's going to add on to a negative data. Okay, so this one, there's no subjectivity to it. It's very mathematical. It's purely based on numbers, all right? These numbers are all taken from your Forex factory over here, right? All these numbers that you see, right, is all computed into this calculation. Okay, so if you see here Aussie, you can see it's red. All right, it simply means that the overall fundamental overall economic performance for Aussie is actually in a contractionary mode. Simply put, means the economy in the Australian dollar, right, in the Australia is not improving. Okay, in fact, if you look at all other developed countries, right, your Kiwi, Cat, even China, Japan, US, Euro, and Pound, they are all in an expansionary mode. All right, expansionary mode in fundamental econs term means the economy is performing, right? So everything is doing well. Your inflation data is picking up, your labor data is picking up, etc. Okay, so this table shows you the fundamental outlook very quickly. Okay, this table shows you the COT, which is a Commitment of Traders report. Okay, this one, what we are tracking here is the non-commercial segment. Okay, so you have whether the net position, is it positive or negative. Okay, so to quickly walk you through, net position here simply means we take into account the non-commercial buyers and the non-commercial sellers. All right, we net it off. If it's positive, means we have more buyers than sellers. If it's negative, means we have more sellers than buyers, right? So very quick is that if it's positive, means you have more buyers, means it's slightly bullish. Okay, this weekly net position, drop or increase. The difference here, what it means by drop or increase is that every week we calculate what is the net position. All right, so if the net position increases, okay, we will have an increase here, right? Week to week increase, we'll put an increase. If week to week drop, we'll put a drop here. Okay, so if you see drop, it simply means that the overall net falls, so it's actually a bearish sign. Okay, so if you see week to week drop here, it contributes to a bearish point. If it sees an increase, means net to net it increase, means it's going more and more positive, it's actually a bullish sign. This above and below average, what we do is we actually take the historical weeks, all right, 33 weeks back, and then we plot an average, all right? It's something like your moving average, okay? And we compare this average with your net position, okay? So if your this week net is above the average, all right, you can simply imagine like price is above your MA line. Okay, so if price is above MA line, you actually have a bullish bias. So similar for COT, if your net position for this week is above the average, which is above your MA, is actually bullish to it. Okay, so below it means it's bearish, above is bullish. COT index is like your RSI or your stochastic, your oscillator. Okay, you have your oversold and overbought condition. So if it's above 80, right, it's considered overbought. If it's below 20, it's considered oversold. Okay, so high chance if it tags the 80 and 100 area, which is your overbought, high chance you're gonna see a reversal and the COT as well. Okay, so we actually, how we come out with this bias, we actually compute this four, and then we come out to it, right? So you see positive, bullish, but drop, bearish, above, bullish, COT is 75, is bullish, right? So it's not bullish because we have one drop here. So that's why it's only slightly. Okay, so what I want to show you is you look at this, Australia economy is red, right? Means it's not very positive. But COT in Australia is positive, increase above 60 is bullish. Okay, so you might get certain information like this that is contradicting each other, right? But you need to understand what they mean and make use of it. Okay, so if this is showing you negative, it's telling you that the economy is not performing well. Okay, but doesn't mean that traders in a non-commercial segment are not looking to accumulate your Aussie. Okay, because your economy at this current moment can be negative, but if majority of the traders says that they forecast that eventually euro will start to Aussie will start to pick up, right? They're gonna accumulate your Aussie dollar right now, right? And that decision to accumulate your Aussie dollar is reflected in your COT. Okay, because overall we have more buyers than sellers in Aussie futures. Okay, we can see the buyers continue to increase, right? The numbers of buyers continue to increase. That's why you have a week to week increase. Your COT in terms of net position for Aussie is actually above your 33-week average, okay, which is a bullish sign. Your COT index is only at 60, meaning it still has room to go. It's not at the overbought condition yet. Right, so that contributes to a bullish sentiment. That doesn't mean that you just use this data and take trades. Okay, so you need to use this as just a filtering process to aid your directional bias. All right, if you're trading on H1 or below, this outlook might not be very beneficial to you. But if you're trading on daily or higher time frame perspective, it's going to add value to your trades. Okay, and you can also use this as a quick filter. All right, so what I mean by quick filter is you want to select those that is very contrasting. Okay, so you can see your commodities currencies are all actually very bullish in sentiment. Okay, you want to pair it with those that is bearish. All right, so for example, euro, pound, franc, yen. All right, very clear cut. Let's take an example on a chart. All right, so Aussie, Kiwi, Canadian, your commodities currency are bullish, but your slightly bearishness. Let me just take a look at which one is the better one. Okay, let's take a look at euro, right? Because euro, it's more bearish than the rest of this, simply because the COT is all-time high. You have a negative net is dropping and it's still above. All right, so let's take a look at this. So we're gonna pair Aussie euro, so we get euro Aussie, right? So I'll show you on the chart what I mean. Okay, so if you look at euro Aussie, okay, I'm gonna go to a daily time frame. Okay, so you can see how COT helps you to filter chart very straight off. Okay, euro bearish, Aussie strong. Look at this, all right? Very clear cut, euro Aussie is moving lower. Okay, so this gives you a quick filter as to the directional bias that you want to trade, right? Even if I go over to, let's say we take another one, all right? Aussie is very strong. Okay, why these two, I'm not looking at it because they are already at an overbought condition, right? So high chance is going to reverse soon. So I would rather look at the Aussie as the most strongest current commodity currency as of now. Okay, let's take a look at franc as well because it still has room for it to drop, right? It's slightly bearish. So let's look at Aussie franc, right? Okay, let me clear off everything. Okay, again, if you look at this based on COT bias, all right, again, look at Aussie franc is very clear, it's moving higher. All right, you have this. So this is how you're going to use this data over here. all right, to help you select trades that you might want to look out for in terms of opportunity, right? And then again, for those who have your own strategy, you can look out for trades like this, right? You look at this level has been broken, wait for the retracement and then take their trades and etc. Right, so this is how we're going to use this, and then hope this video itself actually explain to you why there's a difference between the COT overall outlook and your fundamental, and how you're going to use them to help you in your trading. All right, any other questions? If not, then we're also going to end this video here for the room. Okay, it's going to be recorded, so you can actually refer to it after that as well if you want to recap any of it. All good? Any questions? Last call. Okay, so no questions. We'll end it over here, and then have a great week ahead, and I'll talk to you guys again the following week. All right, see you.